If you've ever back tested a strategy and then went to live trading and it absolutely fell flat and did not work, then this is the episode for you. Or if you've ever found a strategy on YouTube that was supposedly working so well for some guru or somebody who was promoting it, and then you traded it and it didn't work very good, this is the episode for you. Listen, guys, this could not be going better as a teaching tool, showing you exactly how to develop a strategy because this strategy is absolutely crapping the bed right now. It is absolutely getting destroyed. It is not working very well at all, and it couldn't be more perfect for me to show you how realistic it is to get into a strategy and you think you got something and then it just does not work whatsoever. Guess what? The edge is built in pushing through that. The edge is built in continuing to track your trades, continuing to review what's going right and what's going wrong, and the broader market and how it's affecting the outcome of your strategy. This is where real edge is built. This could not be more realistic. I'm so pumped to share this with you. And I know I shouldn't be because, the strategy is actually not performing super well. All right, let's get on to some charts here. I want to show you how the week went. Okay, first off, I logged the trades. We didn't take that many trades because I mean, in my experience, I said I was going to add some discretion into it, and the discretion has been in not trading. However, I feel I got pulled into some trades a little bit, just trying to get something going. But there's two things that are happening here. So one is with, say, this MNQ trade on the 20th. That was a loss. I feel like I got pulled in. You could call it maybe a bit of FOMO, which is fine. It happens. But down here, trading GEV and Texas Instruments, that wasn't FOMO. That's casting a wider net. See, we're trying to find what works. At first, you need to expect that the strategy's not really going to work. You need to find what is actually working and what's not. So I had a theory that because we're in earnings season, that some of the momentum is going to go to these stocks that have reported earnings and they have strong earnings, strong guidance, and they're going to be breaking out because of that. So I'm going to start incorporating some of those moves. Just check in the morning what reported earnings well the day before and see if there's some sort of edge there trying to trade momentums. Qualifier is that in addition to the fact that earnings went well and guidance went well, it has to be in a strong sector. So like GEV, right, is energy. That's a strong sector right now. TXN is semiconductors. That's a strong sector right now. All right, let's review some trades here quick. Again, not a full review. I know I've been saying for weeks that I'm going to do a full review, but the reality is that I actually typically haven't done full major reviews until I have like 100 trade occurrences. And I honestly haven't really wanted to say that to you till now. I've been talking a lot about the information you can get from reviewing just 10 to 20 trades. That's me just trying to encourage you to just get started, find some information. But as you get into it more, you get more excited about reviewing like 100 trade occurrences because that's something you can actually go back and find meaningful information that will actually affect your strategy. So I'm kind of more excited about that, I have to be honest. We will get there. We will do a full review. Okay, I'm just going to split the screen a bit here so that I can see the trades. Okay, so April the 21st, April the 20th, I didn't trade because I was feeling like things were a bit choppy. There was no real direction to the market. I didn't feel strongly in my personal experience and my discretion that the market was trending strongly. So I didn't set up a trade and I was really okay with that. But on the 21st, I did set something up because we kind of broke out over the previous day's high, and I thought maybe we could get something. I'm qualifying it as a bit of a FOMO trade. I probably shouldn't have traded that because you can see we just ended up getting stopped out. So, as such, I also moved away from MMQ. Bitcoin has been doing something lately. And so, what you can see here is it's a very typical got stopped out, got stopped out again over here, I guess. And then, I would have got stopped out a third time, but in after hours, Bitcoin started rallying higher. So, that's the way that goes, but I am going to make note of it and that this will all show up when I do like a global review. I'll come back and see that this happened. And when I review several Bitcoin trades at once over the course of weeks or months, I'll either see that this is something that happened pretty consistently, or this was just a one-off thing and it doesn't mean anything. But when you're doing it the typical way that retail traders do it, you're going to look at this and you're going to think, oh man, I got stopped out and then it reversed straight away. Yeah, this is like the most common thing that happens. Like it happens to everybody, it happens all the time. And what you need to do is quantify, does this happen a lot? In which case I can create some rules that will allow me to catch this kind of move. Or was this just a one-off thing and there's no way that I could have known that it was going to do this? We'll know more at the review. For now, that was two stopouts. So going back to MNQ, we ended up trading that on the 22nd and we got a winner. So again, we got stopped out the day before. If I had not got stopped out, it would have been a really big winner. But as it was, I set up a trade at the end of the day and it looks like it triggered here. And we got actually a pretty decent winner. We did okay there. I think, yeah, we got our 2 to 1 on that trade, risk to reward. So we did well. So as I mentioned, I moved over to GEV on strong earnings. And so this is an interesting trade because both GEV, this MNQ trade on the 22nd, the sorry, not this one. Maybe it was this one. Yeah, I got stopped out. So at some point, GEV was up almost 1 to 1. TXN was also up almost 1 to 1. And MNQ was up almost 1 to 1. So I wasn't even getting 1 to 1 risk to reward. But here's what I'm learning, and I'm actually going to track this in kind of like what we're learning tracker, is that sometimes you need to take the base hits. So I've been working pretty hard to try and get, that 1 to 2 risk to reward, trying to get like bigger wins. But if the market's not supportive, if it's not giving you that 1 to 2 risk to reward, then you kind of have to just go with the flow. And you need to develop some skill and some experience around being sensitive to what that flow is. Like I mentioned at the beginning of the week, I just didn't feel like we had, uh, you know, strong direction. Like we weren't strongly going in one way or the other. It seemed like it was going to be a bit choppy. And under those conditions, maybe you do need to just take the 1 to 1 risk to reward. Maybe this strategy ends up looking, like I'm shooting for, you know, I'm aiming for like a 60% win rate, and I want a risk to reward ratio, uh, closer to like a 1 to 2 or 1 to 3 risk to reward ratio, which would be really ideal. But if that's not what the market's giving me, and these numbers all end up looking quite a bit different, but this number ends up turning positive again, well, then I've got a good strategy, and that's okay. And I need to just go with the flow with that and just allow the trade to kind of happen as it will. If I'm ending up looking profitable, then that's a good thing, right? However, I get to that profitable expectancy, I kind of have to be flexible there and get what I get. So right now in the market environment that we're in, I might end up taking, what's referred to as base hits. Just taking a lot more of those base hits. Maybe I'm not getting my full 1 to 2 or 1 to 3 or getting some awesome 1 to 5 risk to reward big win, but they'll come. Right now, it's probably more important that I don't get stopped out and just take whatever is on the table and then try to learn to recognize those opportunities when the market's willing to give more and then stay in the trade longer then. So, as you can see, there's nuance to this, right? And we've talked a lot about that. Oh, I didn't show you my TXN trade. That one is actually still on. And you can see here, I got in here. I could have taken profits here, but I had my profit taker set up here because I thought it was realistic to get there. It wasn't. I should have just taken my profits either here or here or here. Like I should have just taken what was given to me, right? But we're learning. We're learning this strategy. We're learning what kind of opportunities are available. So that's okay. It's okay to lose. If you've never read Rich Dad, Poor Dad, you should read Rich Dad, Poor Dad. I know it's a book about real estate, but more than that, it's a book about how to think about money and opportunities and building assets. And Rich Dad is famously quoted as saying, fail faster. You need to fail faster, right? So that's what we're doing right now. We're failing as quickly as we can so that we can learn from those failures. We can learn what doesn't work and what we possibly could have done to make this better. So if you agree, disagree, have any thoughts on that, or want more information, you want me to expand on it further, please leave a comment and I'll see you on the next one.